Hey everybody, Bargain Brother with you in the Bargain Basement, your prize winning penny pincher, here to help you save and make money, mostly make money. In this video, I just want to chime in real quick and jump back into the stock market for a minute and talk about slow money and how it's better than no money. So sometimes the market is really volatile and people are jumping into all these stocks that are doing all types of crazy movement. And then at other times things are a little dead. There's not as much trading going on. There's not as much movement that you're looking for if you're an intraday or swing trader. And I just wanted to point out one particular company, and that company is SiriusXM Holdings, that is basically slow as molasses. It's a boring company. But if you're someone that's a swing trader and not kind of glued to a screen all the time, it may be a company to consider, and there's many others like it that have similar kind of a cyclical movement. But before I jump into that, if you find value in this content, please do me a favor and like the video, subscribe, and share it. I'd really appreciate it. It helped me out a great bit. Now, let's just jump right into it. So SiriusXM Holdings has been publicly traded since the late 90s. I found out about the company initially as a truck driver over 15 years ago. XM satellite radio was something that I used in my truck. They had a competitor, which was Sirius satellite radio, and the two companies eventually merged. I'm not sure what year that they merged, but they eventually merged and became Sirius XM Holdings. So that's their main product, is giving you radio, satellite radio, as opposed to the radio in your car, like the AM FM, which is known as terrestrial radio. So currently the stock is probably trading somewhere in the $6 range. It doesn't have a large movement from day to day. It usually only moves a little bit. But I want to point out on some charts how if you buy it when it's grossly oversold, it can still be a double-digit return investment. It doesn't happen all the time, and it takes a little while for it to form, but if you jump in and you got some patience, it can be a double-digit return on investment for Sirius XM Holdings. So I'm going to put up the daily chart in just a moment. I think I got it now, and you'll see we're going to go back to March of 2020 when the historic stock collapse due to the economic downturn, coronavirus pandemic, jobs lost, unemployment filings at record levels. It bottomed out in late March at $4.11 per share. Now, between that time up until late May, which was only about 2 months later, it got as high as about $6.70. And you'll see when it bottomed out, it was so far below all the moving averages I have here, which is the 20-day moving average is the blue line, the 50-day moving average is the yellow line, and the 200-day moving average is the red line. So it did a full death cross, which of course is when the 50-day moving average crosses below the 200-day moving average, and what I call kind of like a, not quite a death cross, but a life support cross, is when the 20-day moving average crosses below the 200-day moving average, and that sucker went all the way down, got so far below everything, and there was lots of room in there for profit from you, from $4.11 to $6.70. So that's about $2.59 of profit. For example, had you purchased it at $5 and exited at $6, that would have been a 20% return on your investment. Now, this is an inexpensive stock, folks. So if you have a decent size cap available to you to trade with, you can really buy a lot of shares of this particular stock. And you'll see the profit zone that I have here. It's kind of bordered in black and it has profit zone written in the middle. That's the area where it would have been okay for you to go ahead and buy in, hold until you reach your desired exit point, and then strategically got out to get profit. So that's one example of how you could have profited from buying Sirius XM Holdings when it was grossly oversold. It was below every moving average. The RSI, or relative strength indicator, was in the toilet. This thing was just begging for buys because it was so low. They were either getting ready to turn off the lights and say, to hell with it, this stock is done, or it was going to start going up. Chances are, based on previous history, that it was going to start going up because it was valued much higher to that prior to the pandemic. So that was coming fresh at the start of the pandemic, late March 2020. Let's look at another time period going forward from there. We're going to go up to the fall of 2020. Let me just get that chart up. Okay, so we got it now. And in the fall of 2020, this is around October, after the stock kind of dancing back and forth, consolidating for a while, it finally started to sail back off. As you can see, it was way below all moving averages. RSI was in the toilet. This was around late September 2020. It bottomed out $4.95, and by late November, a couple months later, just about 2 months or so, it topped out around $6.70. So again, we're talking about somewhere in the area of $1.75 or so of profit. So there was plenty of room for you to get in there and get anywhere from 8 to 10 to 15 to 25% return on your investment, just by riding it back to the top and using your moving averages to kind of help you make sure that you are still in an uptrend, because during that time it did have some down days. As you can see, there's some bear candles in here. This is the daily chart. There are some bear candles that you can see, but it never broke below certain moving average, and it lets you know that, okay, this is okay, and it's in an uptrend. And you know, once you reach a certain profit point, you just have to know that, you know, sometimes it's just good to take profit off the table, bank it, and then if it continues to go back up, you can still get back in, but at least you're out with profit now. So these are just two examples of SiriusXM holding. Slow, it's not going to excite you. It's not worth you staying glued to the screen looking at it every trading day, because it doesn't move a lot. It moves a little bit. It adds up over time, but it's a solid profit machine if you buy it when it's grossly oversold, and then sell it once it's approaching being grossly overbought or somewhere near it, or whatever your profit point is once it hits that. And the good thing is there's tons of other stocks on the market that do the same thing, from stuff like Apple. Believe it or not, Apple is kind of a slow mover. People don't look at it that way, but Apple is over $100 a share, and there's a lot more people that can buy SiriusXM Holdings and really buy a bunch of shares at $6 or, you know, or so per share, and try and get 8, 10, 15% return, then can go buy Apple for $120, $130 a share and try and hold out for the same profit. You just have more flexibility. And what I always recommend is do not use your entire capital investment amount that you have available for you when you start that position. I recommend like starting a position with half. That way, if you have a significant pullback, you have an opportunity to average down by bringing, of course, buying more shares, bringing your actual entry point down, enabling you to get more profit when the stock starts to go up. So that's what I want to talk to you about today. Slow money is better than no money. Just ask the person that has no money if they'd like to have slow money. So that's all I have to share with you today. There's lots of other stocks like this. I'll be coming with more and more videos to just get you more and more in tune with trading, developing strategies, improving credit, to be able to leverage that credit to invest in stuff like stocks and other stuff like real estate. So stay tuned for more of that. So Bargain Brother's going to get out of here. I'll be back soon. Please don't forget to subscribe, like, and share if you found value in this content. And in closing, if you are taking the stairs or the elevator to the peak of your mountain, it does not matter as long as you get there. On that note, see you guys in the next video.